The Nigerian stock market was described as one of the best in the world in 2017. Of course, you've seen the report before the year finished off. And today, Bloomberg reports also that Africa's debt market was one of the best hunting grounds for investors globally in 2017 because we provided decent returns to investors despite the currency volatility in some of the markets across the continent, in South Africa in particular, and a few other countries around us. And, of course, the issues around commodity prices. But overall, equities and fixed income was or debt market was very nice across Africa, generally speaking, in 2017, and Nigeria was part of the leading light of that. So let's give ourselves a handshake for that as we start a brand new year with Omotola Abimbola, an investment analyst from Afrinvest, and I'm taking all my handshakes this morning. Thank you. Let's start a new year with us. Good morning. It's good to have you.
My pleasure.
A very nice year when all the news are coming in that, yes, it was good across all frontiers, as it were, for us. But Nigeria is sharing in that a glorious year for 2017. But let's take a look at 2018 and read the market tea leaves for us. The rally that we had last year on the equity side was one of the best in about a decade since the market melted down in the first quarter of 2008. So remind us what were the fundamentals behind the 2017 good year that we had.
Indeed, we had one of the best performance globally in 2017, and that is no mean feat because 2017 was a generally positive year for the global markets. If you look at the performance of risk assets across developed markets, from continental Europe to the UK, to the USA, even to Asia-Pacific region, it was a generally bullish performance, driven by the fact that we have been in a phase of synchronized global growth expansion. We are seeing growth momentum, strengthening all across the globe. We're also seeing accommodative monetary policy by major, central banks like the ECB, the Bank of Japan. The US Fed is tightening a bit, but if you still look at the real interest rate, it's still negative rather. So generally, it was a very strong year for risk assets in the global market in 2017, and Nigeria to have been able to outperform in such a good year is a positive thing to note. And talking about the factors that drove the performance of Nigerian equity market in 2017, I would say it's a combination of some favorable cyclical, rebound in some business cycle anchors like oil price and crude oil production, and also partly driven by some major policy reforms implemented by the Central Bank of Nigeria and also the fiscal policy managers as well. 2017, we saw a rebound in commodity prices, particularly oil. And as you would know, oil production and crude oil prices, they are two of the most important macroeconomic, anchors in Nigeria, and for most frontier markets anyway. So that was the major factor that boosted Nigeria's external reserves. It increased FX liquidity and also gave the CBN the confidence to engage in liberalization of the foreign exchange markets, which culminated in the April 2017, opening of the investors and exporters window. Immediately we saw that happen. We saw investors, particularly foreign investors, coming back to the Nigerian markets, and we saw a gradual repricing of Nigerian equities. So we saw price to earnings of Nigerian equities rising from around 11 to 12 times at the beginning of the year to nearly 14 times by the time the year ended. Also, if I may add, I think the fact that earnings of companies have been resilient as well was also a major driver. If you look at the banking sector, we saw earnings being driven by high interest rate environments. If you look at the consumer goods and the industrial goods sectors, we also saw earnings, rebounding significantly in those two sectors, driven by increase in products prices and the fact that we are seeing lower inflation rates and margins are expanding, overall. So all these factors were the drivers of the significant positive equity return in 2017.
FX was the top story. But if you look at the CNN Money report, and it has it there, the online says there's still the outlook for 2018 for Nigerian equities is still very strong.
Indeed.
In 2018. in this new year. So that's what we fight. Well, do you think the FX fever of the IE window, we're heading towards the first anniversary of that window in April, so we'll still have a few months to go. Do you think this will likely fizzle out?
Well, I believe that the outlook for the markets, or rather we believe that that's for the market in 2018 is still positive, but the driver of performance, I don't think it will be the high and heel window any longer, you know. I think we've already seen the high and heel window rally taper out towards the end of last year. 2018, if you're looking at valuation multiples of the Nigerian market compared to other frontier markets right now, you see that the premium has reduced significantly. So there is no arbitrage to explore again regarding valuation multiples. But 2018 returns will be driven by what happens to earnings. It's going to be earnings, 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 earnings. And on earnings, we're also very positive on that because we are already seeing a slow but steady rebound in the economy, which is happening already. We are seeing inflation rates moderate. We are seeing FX stability. All these things are positive for margins of companies. You know, so as we are seeing margins, you know, continue to expand in 2018, as we are seeing revenue, you know, also improve because of the stronger, you know, growth outlook. I think for us, we still think earnings will still grow by double digits in 2018, and that should drive the market's return.
Fantastic. So give me your top, well, give me your top risk factors for equity investments.
There are two major risk factors, or rather, let me say three major risk factors in 2018. The first is political uncertainty. Number two is policy-induced volatility.
And number three?
And number three is commodity prices.
Okay, let's start with number one. Politics. Okay. Yes.
Yeah, we are approaching the 2019 general elections, as we all know. It's only a couple of months away, about 14. It's taking place in February 2019. So we're just about 14 months away from it. I'll be seeing the primary elections for the major political parties taking place in the second half of the year. You know, and typically, if you look at the performance of the Nigerian equity market, and in fact, most frontier markets, if you look at what happened to Kenya and South Africa in 2017, where we saw the political uncertainty affecting asset prices, typically in frontier markets, during political cycles, we see asset prices, you know, underperforming. And we don't think Nigeria will be any different in 2018. So as we're approaching the primary elections toward the end of the year, we should expect to see some volatility, you know, in the economy towards that period. However, if we are able to, you know, marshal our way through the primary elections without seeing any major violence or any political violence outbreak, I think we'll still be able to see decent return for 2018 for equities.